So you could end up with a situation this time around where gold goes up and becomes monetized, silver with it, where suddenly you go to a new price level, not just because of industrial demand for silver or anything like that, or repricing it out of an old reality into a new reality. Both moves, one peaked in 1980, one peaked in 2011, were 8-fold moves. Not the same dollar amount, but the ratio move. The same dimensionality of price gain, 8-fold, bear low to bull high. So I expect gold to go to 8,000. That's just matching the old highs though. That's not even abnormal. That's like saying, oh, I did it again. How about we go a lot further than that? Don't be surprised. Like 20,000. I expect silver maybe be $200. And you'll go into a new reality. And yeah, you'll get a sell-off at some point, but it's likely to be in a reality that possibly even overshoots what a real price conversion of silver would be, factoring in the decay in the value of the money unit, the dollar.
As gold trades around $4,000 to $4,100 per ounce and silver nears $50 to $51 in November 2025, precious metals continue their historic bull run, with prices up over 50% year-to-date amid geopolitical tensions, a weakening dollar, and unprecedented central bank demand. Central banks have purchased over 600 tons of gold in the first 9 months of 2025 alone, on track for another 1,000-plus ton year, led by emerging markets like Poland, Kazakhstan, and China diversifying reserves, while some, including Russia and India, have even begun adding silver as a monetary metal for the first time in decades, signaling a broader shift away from fiat currencies. In this explosive environment, veteran momentum analyst MichaelOliver warns that the gold bull market is just beginning when measured against overinflated U.S. stocks, highlighting a massive 11-year technical base in the gold S&P ratio that's now breaking out decisively. Oliver predicts gold could easily reach $8,000 just to match prior bull market multiples, and potentially $20,000 or more as monetary repricing accelerates. Silver, riding gold's coattails with possible fresh monetization, could surge to $200, shattering old norms in a new reality driven by dollar decay and global asset class rotation far from over. Oliver sees this as the start of a multi-year supercycle where gold outperforms paper assets dramatically. Let's watch clips from MichaelOliver's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
If I had to say there's one chart that's more important than any other chart, including S&P, NASDAQ, gold, silver, any of them, it's this one. What it shows is gold, ounce of gold, using front month COMEX contract, divided into the S&P price, okay? And you can see back in 2011 through 13, especially in 13, which is where this chart starts, gold was collapsing in price also against the S&P. It was losing value to the S&P. And when gold bottomed in late 2015, that spread reached down to about 50%, that first little circle you see there. And at that point, you can go sideways for 10, 11 years now, and it's been above that level and below that level, but basically par to the S&P. In other words, it's, depending on the point in time you pick, it's doing better or a little bit worse than the S&P, but basically going sideways, okay? Meaning it's not really been as bad as people think. And it's not just recently that gold's firmed. It's at the upper end of the 11-year range right now. But this thing has built a technical base that is so clear it smacks you in the face. It's hit 1, 2, 3, 4 times as of April this year. You bumped that line, backed off again. You're back pressing at it right now. In fact, you're above it intra-month. This is monthly closes. So gold into the S&P. And you close the month where you are now. Divide gold into S&P, it's going to break out. What does that mean? It means that this is a fresh, massive technical base breakout. Treat it as a price chart. If you looked at this and saw it as a price chart, you say, oh boy, I'm going to get on board. And I'm going to buy. Well, this means buy gold, sell S&P. In fact, you want to go market neutral, buy gold, sell S&P. You put a spread on. But it's also telling you that gold is going to surge versus the S&P. Now, by the way, when we do this same chart, we didn't have it in this report, versus the Dow, or gold versus the New York Composite, both very broader indexes that aren't front-end loaded with a couple of AI stocks like the S&P is. Gold's already broken out. But when this guy breaks out, this spread breaks out, it's telling you as a major asset class shift is underway, it's commencing. Gold is now going to outperform the S&P. So if you invest over spans of time and want the better asset class, it's saying gold is going to lead the S&P now. It's the better place to be. And our assessment is, one, it's going to be the consequence of two things: gold going up and S&P going down. So this is our table pounding technical chart to nail you all. If you're in the stock market or the gold market or wherever you are, this is the most important breakout that's about to occur. And if it breaks out, which it will, this is too persistent, okay? It's saying, I just began. So if you think gold is old, it's just begun its major shift against the paper bubble, the U.S. stock market. Just began. It ain't going to end in 3 months. This is something going on for years. So don't think of gold as being at the end of something. It's just beginning when you measure it versus the U.S. stock market. And again, it's already broken out versus the Dow or the New York Composite. It's about to break out versus the S&P. So this is a very important investment grade technical chart. So you could end up with a situation this time around where gold goes up and becomes monetized. Silver with it. Where suddenly you go to a new price level, not just because of industrial demand for silver or anything like that, or repricing it out of an old reality into a new reality. When gold goes up next time, all of a sudden this country, that country, that country, that country. No more fiat currencies backed by real stuff. And that could be the outcome of this move. So this stock market move, this gold move, commodity move, all the things we can talk about here shortly, could be different this time. They're likely to be in terms of significance. So you only have 50-year history. The U.S. government legalized it, okay, in January 75, okay. Over that time, there have been two major bull markets. And if you measure from the bear low that preceded the bull market to the bull market peak, bear low to bull peak, both moves, one peaked in 1980, one peaked in 2011, were 8-fold moves. Not the same dollar amount, but the ratio move. The same dimensionality of price gain, 8-fold, bear low to bull high. Okay, we're only 4-fold. We started from a bear low at 1,050, multiply times 4. Okay, you're a little bit better than half the dimension of those two prior bull markets, which were of different duration, by the way. One was about 3.5 years, one was about a decade. Okay, so I'm not counting the years. I'm just saying how much did it move. And it moved under circumstances then that are by no means as dynamic pending as the ones we're sitting on right now. So I expect gold to go to 8,000. That's just matching the old highs, though. That's not even abnormal. That's like saying, I did it again. How about we go a lot further than that? Don't be surprised. Like 20,000, whatever. Again, it's going to depend not on so much the technical dynamics of gold when you do swing measurements or anything like that. It's going to be on these other factors that suddenly cascade into play. They're not evident right now to most people. All they're focused on is AI,
As silver hovers near $50 to $51 per ounce in mid-November 2025 amid ongoing supply deficits and surging green energy needs, the white metal faces its 5th straight year of structural shortages. Industrial demand, led by solar panels, expected to consume over 300 tons in 2025, EVs, and AI infrastructure, now accounts for nearly 60% of total consumption. Emerging market central banks like Russia, India, and Saudi Arabia have quietly begun adding physical silver to reserves for the first time, signaling a historic monetary pivot beyond gold momentum. Expert MichaelOliver declares silver's 50-year price suppression is ending explosively, comparing it to copper and lead's quadruple breakouts 2 decades ago after multi-decade ranges, shattering old realities in a compressed, violent move that will leave normal technical tools useless. Now let's go back to the video.
But as far as I'm concerned, just as the U.S. government and their central bank, just like the EU and Japan, don't control reality. So even if they set a price, I don't care. It doesn't mean it's going to stop there. Okay, they don't fix price. They may try to. I mean, there's some solid arguments that they've been manipulating silver. We need to get onto that too, and capped it off for the last 50 years. Well, copper and lead have quadrupled. I'll get into that in a second. And suddenly, I think silver is about to leave and overrun that attempt to control the price of silver. And we know some of the big banks have been manipulating silver. In fact, there's been a couple actual criminal convictions in that regard. But if you want to, we can get on to that next subject. And you've got the spread chart of silver versus gold. This only goes back to 2020. Okay, so 5 years. We know in early 2020 into late 2020 and early 21, silver exploded in price. And therefore, the spread chart showing an ounce of silver divided into an ounce of gold was under 1% then. It was under 0.9%. Divide an ounce of silver, an ounce of gold. It shot up to about over 1.5%. That's a huge percent gain. It's like buying a stock at under $9 and it goes over 15. Did it in like 6 months. These are weekly readings here, by the way, week to week. But then since 2021, when silver was over 1.5%, which is still dirt cheap historically, silver to gold, it eroded. Now, price of silver is going up since 2020. We know that. 2020 was 30. We're now, $52, 53. So it's gone up, but its performance versus gold has eroded, meaning it's not gone up as much as gold from that point to the current level. Now, you'll notice since about March of this year, that thing exploded back up again. So silver's been outperforming gold for the last half a dozen months or so, gaining. But there's a green line on that top chart, the spread chart. If you can clear that line, this spread breaks out, and that line goes back over 3 years. Ceiling, ceiling, ceiling. It's called what you call a base, okay? You break out over that, it's a fresh buy signal, meaning time to buy silver rather than gold. Doesn't mean gold's going down, just means silver's going to beat it. So if you have the combination of that first chart, gold breaking out versus the S&P, what it's telling you is you want to be in monetary metals, not the stock market bubble. This chart says you not only want to be in monetary metals, you want to be in silver as opposed to gold, because it's going to beat gold. I'm strongly of the view, assessment, that when that first chart breaks out, gold versus S&P, as I said, it's already broken out versus the broader stock market indices. Silver's going to break out versus gold. And already this spread chart doesn't show where it is right now. It's up. It's moving up toward that green line right now. This chart's a week or so old, and we know a lot has happened in the last week. So that's another spread I'd watch, because it's not only telling you monetary metals are a place to be, but now you really want to focus on silver. Now, where might it go? If you go back 50 years and measure the peak point of where silver was versus gold each of those years, what was the highest rate, percent level, ounce of silver? 20 of those 50 years, it was at 2%. No, some of those years weren't even bull years. In fact, the bull years, 1980, 2010, 11, silver was up to 3.5% and more the price of gold. But just routinely, 2% is not uncommon, 20 out of 50 years. Well, heck, right now you're at 1.27% as we speak. If it went to 2%, just a norm, well, that's a huge move. That's almost a doubling of the price of silver in relation to gold. Well, as you know and I know, silver's had a supply-demand deficit for 5 years. And yet everybody ignores it, okay? And we know that silver is no longer used in photography. It's used in solar panel production, which comes from China primarily, about 80, 90%. And it's in high demand globally, and it's growing annually, especially in countries like Africa that don't have major power systems, and therefore solar power is very important. So there's a great rising demand worldwide for solar panels. It's also used in high tech, in AI and so forth, in microscopic forms, yet it's pervasive. It's an essential conductor. So demand for silver as an industrial metal has been already in a supply-demand deficit, yet silver hasn't responded. It's still stuck in that range of 50 years ago. Well, it's slightly out of it right now, but how come silver's been in that range? There was a range, a reality for copper price or for lead price from the 70s, 80s, 90s into mid-2005, 2006, and 7, where they were stuck in this multi-decade range, just like silver's been in this 50 to under $10 range, back and forth, but for 50 years. Copper in 2005 and 2006 broke up out of that price range and literally in a couple quarters quadrupled in price. Oh yeah, it had a hard sell-off after that, but it never went back to the old reality. Instead, the average price for the recent decades has been what? 4 times the price of the prior decade. How come silver's still stuck, or has been stuck, for 50 years? Gold hasn't done that. Gold's continually made dramatically higher highs at each move, but silver's been capped. Well, one argument is, and it's got backing, is that banks, probably backed by the Fed or encouraged, have been trying to control silver price. Ultimately, that kind of manipulation doesn't work. Reality takes over. And sometimes when you compress something like that, all you've done is make it explode even more when it unleashes. So good luck, guys. I think we're on the cusp of that right now. And I think silver is about to do something. I expect silver maybe be $200. That fast. And people are looking for normality. Like, we go up 4 steps and pull back 2. Go up 3, pull back 1. All that nonsense. The norms will be shattered. And you'll go into a new reality. And yeah, you'll get a sell-off at some point, but it's likely to be in a reality that possibly even overshoots what a real price conversion to silver would be, factoring in the decay in the value of the money unit, the dollar. Not versus other currencies, but its real value, the quantity of dollars, the M2 chart, which is, goes up about 90% in supply every decade. Okay. And so being $200 might just remotely match the 1980 high. So, and I expect it to happen very quickly. And frankly, if you're not there, you're going to miss it. But don't use the normal tools. They won't work.
Oliver's core message is unmistakable. The multi-year gold S&P breakout and impending silver-gold breakout signal a violent multi-year rotation out of paper assets into monetary metals. Gold to $8,000 to $20,000 and silver to $200 plus are not fantasies. They are the minimum repricing required as decades of alleged suppression collapse and a new, higher reality begins. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.